All right, it is Saturday morning. Let's take a look at the Macro Cafe. This is episode 19, and we have a few interesting slides today. And these are the questions that I'm asking in today's episode. Have the markets bottomed? We're going to take a look at the crypto market cap, with the inflation starting to come down and the gold going up. What's going on in there? Do we have a top in the dollar? Is $200 oil still possible? And then at the end, I'm going to have 3 charts that you do not want to miss. Listen, I am your host, The Cowboy. This is Elliott Wave Cafe. Let's get started. All right, so we're going to take a look at the question, right? Have the markets bottomed? And we're going to take a look at the S&P 500, at the NASDAQ, and at the Russell really quickly, see what the markets are telling us. So this is a 2-week chart. You can see in here an Elliott wave count, which continues to suggest that we're going to continue to push higher. We have a beautiful uptrend. And it continues to be respected. I mean, this is a large channel where you have the bottom line in here that connects with the 2020 lows, but then you also have the middle line of the channel, which is, another section all on its own, and the markets have been reacting to this one as well several times. So here we are bouncing from toward 36.24. I think we might have a wave to completion in here. There's a few things that we watch for, but we continue to remain in a pretty strong uptrend in here. This chart, just tells you that we're moving higher. We do have corrections along the way, but it's been pretty nice and kind of a violent rally, and we've been talking about those sentiment extreme that we've had when the markets were pushing here into the 36,000-3700. So here is the chart of the S&P 500 on a 2-day. A couple of things I wanted to draw attention to. So we've had a nice rally in here. We climbed above the 20-day moving average. You can see the 200-week was right below at about 35.39. This level was never really tagged, and we've rallied. We've climbed above the 20. We've climbed above the 50, which is an important, kind of a reversal trend kind of indicator. And then we're approaching the 200-day moving average. You can see the counts in here in an ABC for a W, then up in X, and then down in another ABC. This is a pretty clean double zigzag, and we're reacting again from 36.24. We're going up in an impulse, correction in a wave 2, and if you're arguing on this not being a third wave, I don't know. I think it's pretty clear. I think it's pretty clean. It's definitely a strong impulsive move. It's got nice direction, nice momentum. I can't qualify it as anything else but a third wave at the moment. So unless the market decides something else in the future, I'm going to label it as a third. We are approaching, if not already past, the 161.8 multiple of a wave 1. We have crossed above the wave B of the previous zigzag in here. And the only issue that I have a little bit is the fact that we're approaching the 200-day moving average. So we're going to find some resistance in here probably into the next week. The markets might start to fall maybe into some type of a fourth wave. But there's no indication yet that that's the case. So we'll watch the price. But if a low was found in here, at 36.24, that means that this impulse here has to continue. We have to form a wave 1 of the lows at a higher degree, then pull back again in 3 waves, and then continue the ascent and overtake 48.18, over the upcoming quarters. So for now, things are looking great. The market continues to recover. I do not think it's a counter trend rally. But we will see. If we're starting to break below this wave 1 low, below this wave 1 high, then we can start to have arguments about that. If we're dropping back below the 50-day moving average, then we can start having arguments about returning to a bearish market. Until then, we're full on bullish. You can see at the bottom in here, I have the instrument ratio, and this is what I'm dividing XLP into XLY. XLY is obviously the discretionary ETF. XLP is consumer staples, so it's risk versus safety, which has turned higher. And it actually has started turning higher around May 12, May 15, when we have found this low in this wave A. But the market was already smelling the fact that we're overextended, that everybody has gotten way too bearish, that we had a bunch of capitulations. You think, Kathy Wood selling a bunch of stuff, and there was just a lot of things happening in terms of fear up into these levels. The XLY XLP ratio was showing you that that's not making new lows, but it's actually starting to diverge and start to move higher. Same thing that kind of happened when we have hit the highs in here, right? Yeah, as the market was trying to make new all-time highs, this ratio was diverging and starting to tell you that the smart money is moving into safety. So very interesting, ratio to continue to watch. I think I've talked about this one last week in the presentation as well. But I have a high degree of confidence that a low has been found, and now we're going to continue to watch these developments in here. Another important, breadth indicator in here, it is the advanced decline line in the S&P 500, and you can see in here that we are making new all-time highs. The markets are not yet over there, but the majority of the market, the majority of the advancing issues are obviously trending higher than the declining issues. So this ratio, it's pushing higher. You can see a clean bullish flag in here. We are above this trend line. We're pushing towards that 7,600 level. And the S&P 500, I think, will likely continue to manifest strength and push higher. We might have a little bit of a correction here, like I said, and you're going to watch maybe a reversal back towards this blue line. But the advanced decline line here, it's one of the most important indicators that you can have, and this one, it's pushing to new highs. So it's again another clue here that these markets are fairly strong. So now let's take a look at the NASDAQ. Again, just a gorgeous channel of this 2009, 2008 lows. And, you have a series of, higher highs, higher lows. I mean, this is the COVID low. You're continuing to push higher. You had a very nice correction here into 11,000, holding the bottom of this trend line. I mean, just a pure technical analysis, guys, in here, channeling and trend lines, and you got to put them on a log scale, especially at this, high degree of trend. And when you're looking over many years, they have an extremely important relevance in here. So you can see you have a top of the channel, you got a bottom of the channel, and the markets are respecting that. So the fact that we have bounced from here, it's encouraging for a continuation higher of the bullish trend. Obviously, we have, a few swing highs that we need to overtake, but the fact that we have bounced from here, I think it's quite important. So that would be a second wave in my view, with the push higher coming up over the next, few years in a larger third, fourth, and fifth, and we can continue to go. And the X in here on a one-day chart, ABC for a W, up in X, another ABC, just a pure, simple Elliott wave double zigzag. Textbook zigzag looks great. You're bouncing higher in a wave 1, you're pulling back in a 2, you're going higher towards 1618 multiple of wave 1. In a wave 3, you're approaching the downtrend line from these levels, which is a level that, sometimes the market can respond and can say, well, it's still in a downtrending market, we're going to react from here. Remains to be seen. I'm going to be looking for a fourth wave next and a fifth wave. And if that happens, that's more of a green light that this downtrend is over and you can actually start to enjoy a much higher rally. So things are looking good, not necessarily out of the woods, but there's a lot of indication here that this rally can continue to have legs. Obviously, on the upside, we'll watch this 15,265, which will be the level to watch. I think we're also approaching the 200-day moving average as well in the NASDAQ. So, we're going to continue to kind of watch that. Let's see what's the next in here. Oh, that's the Russell. So Russell, it's even stronger. And I have a ratio here at the bottom between the Russell and the S&P 500. And you can see here that about May 12th, when we created this A-wave low in all the markets, the ratio has starting to change in the favor of small caps, right? Which are the first ones, because they were the first one that have gotten hit and have gotten, really destroyed in this bear market. They were the first one to start to recover and show signs of life. and this ratio starting to move higher, continues to be in favor of the Russell. And this rally here has been even stronger. We have passed 161.8 and we're approaching 261.8 multiple of a wave 1. So an even stronger rally in here. We're going to be approaching this X wave high. There might be some resistance up in there, maybe a little bit of a pullback in a fourth wave, and then we're going to watch for another fifth. And if you're asking me, hey, don't you think this is an ABC? You know, the evidence of this wave in here, it's so powerful and so strong that I don't think it passes the smell test for a C wave. I think this is a third wave forming at the moment. So that's kind of what I'm shooting for with this advance. All right, so, you know, to conclude in here, I think that the markets have bottomed. I think they have bottomed. There's enough evidence in here to tell us that we should be looking higher. There is breadth participation. You know, we have nice strong rallies. You know, they're continuing to buy the dips in the market when we're selling off. So there might be corrections here along the way, especially now that we're approaching the 200-day moving average. But overall, I think, you know, there was a major capitulation and flush into these June 18, June 19th lows, I think they were, along with the crypto markets, and since then we've continued to rally. So that's kind of what I'm seeing. So I'm going to go with the market goes, and so far it's continuing to push higher. All right, let's take a look at the crypto market cap. So this is the crypto total market cap. You can see in here we're sitting at about a 1.15 trillion dollars in here. The high was probably about 3, and a very important level that we have to overpass is this 2.23 trillion. That's the swing high that we've had from this corrective decline. So if you're looking at this as an ABC or as a WXY, that's the level that we got to take to start to have a much higher confidence that the wave 5 is coming. If you're looking at the count here, it's you know, it's quite interesting. I mean, I'm definitely, you know, watching Bitcoin and Ethereum, and you know, in some of those charts, I'm labeling this as a wave 1 and this as a wave 2. I'm still okay with that being, you know, a valid count even here on the crypto total market cap, so I don't have an issue. What I do like, though, it's the equality of the correction. So if you can see in here, from the top of this wave 1 to the wave 2, projected from 3 to 4 on the log scale, these moves here have been exactly similar, like in terms of their size and in terms of their angle. It's just kind of two beautiful corrections. So, you know, it would look cool for this to be like a 1, 2, 3, 4, and 5. We'll see what's going to happen after that. I'm not that worried that this is going to be the, you know, let's say the top of a much larger let's say Elliott wave sequence and then a much larger decline. I think it's too premature to talk about that, but we'll see. First, you know, again, you watch this beautiful trend line out of here. You have trend lines, right, in the S&P 500, in the NASDAQ, in the Russell. You have trend lines in cryptos, just major levels. A 200-week moving average was hit in a bunch of these cryptos. So, you know, we had a pretty interesting rally. I think Ethereum already has passed these lows in here. I've done a video about it, I think, on Wednesday, so go ahead and check that out. I spent, you know, a good amount of time talking about, you know, how Ethereum, it does not look like it wants to do a fourth and a fifth, but rather it looks much better as an ABC or a WXY correction. So this continues to point, you know, to higher market cap in the future. And, you know, this might take a couple of years until we're reaching those higher levels, but, you know, listen, there is plenty of time. This field continues to, you know, to develop, and I think a bunch of, you know, a bunch of bad stuff has been already kind of flushed away in that kind of massive capitulation that we've had a couple of months ago. So let's continue to move. We're going to take a look at the dollar, I mean, at the gold here, and you know, it's interesting. So, you know, we had inflation pretty rampant, right? We've gone to about 9.1 or 9.2 on the inflation measurement, and gold really wasn't able to rally much. I mean, I think it rallied in anticipation of, maybe that inflation data coming strong, and that kind of started to happen since 2018, 2019, and we had a pretty, nice rally. But we have been consolidating here for a while. So if you look historically, and this chart goes much lower towards this, into the 60s, we've had this kind of super cycle wave one, then what is this, about a 20-year consolidation, 20-year bear market into gold, and then you're starting the next sequence up. You can count it as a 3 and, have a 4 and a 5. I mean, it doesn't matter. Or you can count it as another 1 and it's another 2. For all intents and purposes, I think, gold can continue to be in this kind of, secular bull market as the dollar gets devalued, and, gold is trying to, to keep pace with, with inflation and the monetary debasement and all those discussions. But in here it looks good, and it shows us that, if this was a wave cycle too low, then we would be looking for the next sequence higher, which should start with another wave 1 in here, right? You're looking for this kind of primary wave 1 to develop. And you're having a wave 1 here, 1, 2. So this is intermediate, 1, 2, 3, probable 4, and then another 5th wave in a wave 1. And the whole question right now is this 4th wave done, or there is something else happening in here? Because it does look like you can have also an argument for this being a dollar topping gold. And if that's the case, then we're looking much lower. We're going to come back towards, $1,400, even $1,000 in gold. And that would be as part of this wave 2 not being complete and having, instead of big, large, flat correction. So you will look at this as a 3-wave move down from this top to this low, then another 3-wave move up in here, and now you're beginning a larger decline. So, which one do I prefer? It's hard to say. I think this continues to look pretty good, so I don't have a problem with it. But I'm going to watch for evidence. And for me, that evidence I'm going to show you in the next chart is that this 5-wave move of this highs to this lows, it's a C wave of a flat instead of being a wave 1 of something much larger. Okay, and that's kind of what I'm watching for. But longer term, this continues to look pretty powerful, and I think it's got plenty of chances to succeed. Here is how that top looks right in there, right, which is around, what was this, July, September of 2020. Then we've gone higher one more time in April, just earlier this year, and then we flushed lower in this 1, 2, 3, 4, and 5. This was a pretty nice correction, right? Just a 3-wave move down in A, then you go sideways in a triangle in B, and then up in C for this B wave, and now you're coming back. So 3, 3, 5 qualifies as a flat correction, and if that's complete into these lows, then you're looking for an impulse higher in a wave 1, down in 2, and then up in 3. So just like you're seeing in the stock market, that wave 1 of the lows with an ABC, that's how this market should react as well. An impulse, come back into 2, and then start to build a 3, 4, and 5. The problem is when you have a 5-wave move of the highs, this could mean two things. It's either the beginning of something or it's the end of something. Okay, when it's the end of something, right, that means that the next move is going to be to new all-time highs or to new highs, and that should be part of a flat, because that's what it means when it's the end of something and you have a 5-wave decline. You got to put it in context. And who finishes with the 5-wave move? That's the flat or the zigzag, right? So if this was been like an A, B, C, and you would have had a zigzag, then you could move higher. But if this is a 5-wave move of the highs, what if it's a wave 1 or a wave A, right? So that's the idea. So now it matters how you push up from these levels. If you go in an A, B, C and you only have a 3-wave move, and then you break lower below this B wave, that's going to get confirmed as a 3-wave move, and then there's another large decline coming in gold, and that's kind of what I'm going to be looking for. If this starts to look more impulsive, and that it's pushing higher, and you're starting to overtake this 4th wave, you're starting to kind of, climb back above 1950, then it's going to be less likely that this is a corrective move. And then we're going to be watching the moving averages as well. Another important stuff here is this trend line, which continues to hold this rally in here in gold. So I want to watch what happens if we're getting maybe a slight move higher into the next week, and then just a simple ABC correction. That's probably going to be a buying opportunity. And then, because this does look impulsive, I think we're maybe missing a fifth wave higher, but then we can start to rally again in gold. So that's my view on here. And then you can see here onto the left side, you can see the moving averages. So basically we're still supposed to be weak in gold. Why? Because we're below the 200-day moving average, right? We stayed above the 200 week, which is cool, but as long as you're below the 200-day, it's kind of tough for the gold to be very powerful. So that would be, again, just an indication that if through some kind of a rally, impulsive correction, another impulse, you're breaking back above the 200-day, and then that offers support, then I'm going to start to be bullish gold. Until we're climbing back above this one, I think there should be a caution in kind of how you approach gold. We've climbed back above the 50, so that's a good sign into this week, but we need to see a little bit more up in there. So it's interesting, but I'm not fully behind gold just yet. The market it's gotta kind of convince me. Let's take a look at the dollar too, because I think the dollar, again, is just a big elephant in the room. And you're looking at the monthly chart on here. I mean, look at this massive rejection of that 109 or whatever the high was in the dollar index. And I talked about this as well. I talked to my members. I talked into this kind of monthly reviews we're doing, and you could see, that these type of rejections, they're very powerful. They don't have a lot of, the market don't just kind of brush this off and you're making new highs one more time. And it does look like gold might be done in here with this, latest rally. This is the first indication, right, that you had a massive rejection, and then you're going into a month of August that is still kind of fairly weak. Here we are almost halfway through. For this to get rejected, you would have to have a strong rally in gold starting next week or something. Just kind of, let's get back on it and let's start to see if we can challenge those highs. For me, that's an important kind of price action sign. But I mean, even in terms of count, and I don't have the count in here, but you can look at the 1, 2, 1, 2, 3, 4, 5. So you got a 1, 2, 3, and then you got a fourth wave in here, and then you can have a fifth. So in terms of a sequence, it looks also pretty good in kind of where you are in terms of an Elliott wave structure. Then you have a rejection. You got some momentum indicators that are starting to point lower. So I have a lot of evidence here that it's kind of suggesting that the dollar is kind of cooked. You came below the 20-day moving average. That's the first thing. You dipped below the 50-day moving average. That's another important thing. You're going back to retest it, right? But you're not strong enough yet to overtake the 20. And not only that, but the size of this correction is the largest one that I think we've had maybe since this correction back here. Right, nothing else kind of comes close to the size of this move in the dollar. So, with the S&P 500 rallying, Bitcoin starting to, and crypto starting to show signs of life in here. And I talked about this, the dollar is the one that needs to be watched because as soon as that relaxes off, you're getting these rallies. So now, we just have to get across between the 20 and the 50 for that to move lower. And then I think, the dollar can really push lower and get towards 100, into the kind of the next larger corrective leg. So we seem to have started it. It looks pretty good. But we need to see a little bit more from it, right? We need to kind of see it well established below the 50-day moving average. This is the UUP count in a 1, 2, 1, 2, 3, 4, an extended fifth in here in another 1, 2, 3, 4, 5 to complete a larger third, down in 4, and then you're having another fifth wave in here, which is done. You have a 1, small 2, 3, 4, and up in 5. Already, this wave in here penetrated the area back here, because for a while I was worried, what if we're going to get a fourth wave and another push higher? But the fact that you have overlap, that kind of nullifies that scenario. There's all kind of other counts you can make in here. You can say, well, this could be a triangle and there's still a move higher. I know, but the thing is, the question is this an important top for right now? And I think it is. So I'm going to be watching this channel. I just kind of, I got no points of connection. So I'm just, looking to see if the dollar can establish itself in this more of a, let's say, 45-degree decline type of a channel, and try to establish some boundaries. So that's kind of what I'm watching. So here is another important kind of fact. This is the US dollar seasonality. So, we've enjoyed this kind of rally, but we're coming into the second part of the year. Between now and maybe, I don't know, October, there is another kind of weak period for the dollar, seasonally looking. Now, it hasn't really been responding, right, because you've had a very, very strong year for the dollar so far, even though, seasonally you were supposed to kind of start to decline from, I don't know, 2 months in the year or something like that, and then up to the middle of the year here. But, it's something that I think warrants paying attention to, right? If the first half of the year was not that responsive in terms of seasonality, maybe there's a higher chance that this happens in the second half of the year. So, we have this kind of going for the dollar bears as well. And then, maybe there'll be a period of strength towards the end of the year. So we'll see. But that's kind of what seasonality shows, that we're starting to enter into that period, starting next week. Now, what do you do when the dollar is weak? Well, you're buying emerging markets. This is a kind of mirror view in here. You can see as the dollar is rallying, the emerging markets are not doing much. As the dollar is collapsing, emerging markets are rallying. Dollar rallying, emerging markets coming down. We're seeing signs of life from emerging markets. EEM is the ETF in here, with the dollar pulling back. And if it continues to correct and become, let's say, the next kind of cycle down in the dollar, emerging markets will be, I think, a pretty interesting place to be. Plus, this whole move in here looks corrective. I mean, you can start to put some trend lines and do other technical analysis, but it's one of the places that could be very interesting. Let's say, who knows, maybe even over the next couple of years. So pay attention to emerging markets. The next one, obviously, here is Bitcoin, the correlation between Bitcoin and the dollar. I talked about this. As the dollar relaxes, Bitcoin is rallying, sitting at about 24,500, and trying to break to new highs again. So, it's that's kind of what's needed for the risk assets to rally. The dollar has to continue to either go sideways or get bearish. If we're going to get another bullish dollar, then things might shift, but I don't think so. All right, let's take a look at the oil, because I had a question. Hey, is the $200 oil still possible? In my view, I don't think it is, at least not yet. Maybe, who knows, 5-10 years from now. But for right now, I think we have kind of topped in the US oil. And you can see that the markets were trying to rally one more time, and we're beginning a larger correction. We dropped below the 50, we dropped below the 200-day moving average in here. This is the new downtrend that we're having. I'm going to continue to sell every single rally that's going to go towards the 50-day moving average, and look for oil to continue to drop towards 75, 65 area, maybe back towards the 200-week moving average. So I think we have an important change in trend. This kind of larger trend line has been taken out. And in my view, and kind of what I'm seeing in the charts in here, that I think oil will continue to decline. So $200 oil, I have my doubts. The count is in a 1, 2, 3, 4, 1, 2, 3 triangle in 4, up in a 5. Every time you move out of this triangle, that's a terminal move, and then you're beginning the next correction. Again, we have taken out this trend line, went back and retested it and pushed lower. This trend line was taken out, and the next kind of obvious levels again would be back towards this larger channel on the monthly time frames, maybe back towards the $70 mark. We're taking a look at this channel, and I'm selling every rally towards the top of the channel. So that's kind of my view on oil. And you can see in here, I mean, it's just a super, obviously, cyclical commodity. It has this kind of huge periods of, big rallies and you know, it creates all kind of issues with the economy, and then, you know, then you have this kind of big crashes in oil. And it's hard for me to believe that once you went negative in oil, then you went up to 130, that you're going to stage a rally to $200 oil or $250 in oil. I don't think so. I think, you know, there's probably going to be a period of consolidation. Maybe we're going to be getting, who knows, maybe something like this back in here, or maybe even a sharp drop. But I have my doubts that this can continue to sustain itself through a stronger rally higher. Listen, I might eat all these words, but it just doesn't look like that. I mean, look at this massive resistance back in here, right, from 2008. Then, you know, you established 2011 to 2015. And here we are back again up into that range. So I think, you know, I mean, even $45 oil is not out of the question for me, even though with all this talk of, you know, shortage of energy and all that. But that would be kind of the next level. If you look at these highs, right, and if you're trying to correct, probably that's where we're going to find some support. I'm not saying this is going to happen right in the next you know, few months in here, but possibly something where the market will trend maybe over the next. I mean, look, this is you're looking 2026, and then you have 2030. So you're looking at the, I don't know, maybe at about 6-7 years of a just kind of grind lower in a big corrective pattern in oil. That's kind of how I'm seeing it. Guys, if you want to get in touch with me, I'm not done yet. I have some important charts to show you, but go ahead and subscribe to Elliott Cafe on Twitter. You can find me in here, my charts. You can, you know, any comments, any suggestions, any questions, and I'm readily available up in there. And then also, you know, you can find me at t.me/ElliotCafe_bot. This is the private trading room that I run. You know, we have clients in there, and we watch all these macro assets with daily videos and daily updates for, again, for macro assets, for Bitcoin and altcoins every single day. And we have a chat room. We take live trades, and you can see what I do up in there. So, again, that's the private room on Telegram. Go ahead and give that a try. I think there's a trial available as well. So let's move over. 3 charts you don't want to miss. Ethereum Bitcoin. It's a very important chart, I think. We've had a pretty deep correction in here, and it looks like Ethereum wants to break to new highs after this massive consolidation. You can see, I mean, this is a big range. We're back above the 200-day moving average in green. We're probably about to have a 50 to 200 bullish crossover as well, and I think this one looks poised to push higher, maybe towards these levels in here, right? So what is this? 0.11 to 0.14. I think it's probably going to be the next move. So it has the potential to almost double from here in this Ethereum Bitcoin cross. You know, it's a big range market. I mean, you can look at the 200-week moving average, right? You're kind of bouncing between levels, but you can see that if this was a 1 and a 2, 1, 2, 3, 4, and 5, and then another ABC in here, the way this chart looks, it looks like there's probably a big explosion coming in Ethereum Bitcoin cross. So pay attention to that. That's kind of what I'm watching. You can see Ethereum already outperforming Bitcoin. Not sure if it's about the merge or whatever it's happening, but I'm pretty bullish on this based in kind of how this looks. I think this resistance will get blown out of the water, and this will continue to push higher. Then the other charts that you don't want to miss, it's Bitcoin versus the S&P 500. Look at the rally in the S&P 500 and kind of look where Bitcoin is. I'm very bullish Bitcoin. We've got a bunch of positions open via futures, via cash, you know, also kind of temporary trades that were taken based on Elliott Wave setups. So, you know, we're kind of loaded in here, and we're looking for this to break higher towards 27, maybe even 30K, and try to catch up with the S&P 500. I think a lot of these altcoins are showing similar signs of strength. So, you know, I'm not going to argue with the market in here. It's still a little choppy and overlapping in kind of the way Bitcoin looks. I'm not going to spend time now and talk about counts and stuff, but it does look like you know, it's kind of lagging in here, this huge advance that we've had in the Nasdaq and the S&P 500. So somebody's wrong here, either the S&P 500 or Bitcoin, and I'm very curious to see what the resolution will be on that. But pay attention to this chart. We've been watching it for many months now. And then the last chart that I have is regarding the S&P 500. That's approaching the 200-day moving average, and you can look percentage of stocks above their 50-day moving average, 92.4%. If you guys watch my videos, I used to do daily videos for YouTube almost every single day, especially when we had those kind of bearish moves in the market and those capitulations. And I was talking about the breadth. I was talking about, how extreme some of these levels were in the percentage of stocks above their 50 or below their 50, and how those were huge opportunities in the market. And here we are now with a massive rally, about 92%. And that's kind of what you want to see into a nice bullish trending market. I mean, we're going to get probably some pullbacks, and maybe the market it's gotten ahead of itself a little bit in here, but that's an important breadth indicator to watch. Percentage of stocks above their 150-day moving average as well. We're going to get bullish above green, and then the 200-day is kind of following close behind. And once we get above that green line, I think we're going to get even more participation in here. We're about 48%, so still less than 50 below the 20-day moving average, but things are starting to look quite impressive. So guys, again, it's a long video. I hope you enjoyed it. Don't forget to subscribe. If you're watching, please subscribe and like, and leave any comments, any suggestions that you might have. Come and visit me into the Pro Room. And as always, I appreciate you being here, and I wish you all to have a great week, and I'll see you later. Bye-bye.